never losing no. But I'm broke, but now I'm living adding digits, counting zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested though when I let it grow. Regiments I got a pocket full. Rich the income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my doctor down. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the checks. I buy apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till see the face and they see what I do next. When I walk through the door, I'm talking cash.
Hey guys, if you can hear me, what's up?
And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill. We don't seek balance, nah, we want extraordinary. If you really knew my dreams, every
day has been doing in
we
the chat.
got more to spare. Ain't no shortage, baby. Winning by the chopper and another for my lady. Talking about the bird in the strap. Say the word and she handle that. Fully loaded, put it at the target, and you know we letting off every man. Got my money, who got my back? You can never get it if you never ask. Big bags, legendary swag. Only one thing better than cash. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. Like I know. When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you know about to do, what? Walk in that door.
An award-winning trading app that is as easy to set up as your favorite playlist. Voted most popular broker 2022 by TradingView Awards. Open an account at www.owanda.com. Leverage trading is high risk. Losses can exceed deposits.
Oh my gosh. Hey guys. Sorry about that. I'm gonna stop sharing, Jerry, unless you want to take over.
I will take over. I will.
If you didn't hear me before while you're waiting on me, let me know how your day has been going in the chat. Mine has been a little bit busy, but we're hanging in there. Busier than I expected. Dang, everybody's still seeing my screen and I'm scrolling all over. You got it?
Yep.
That's you. All right. Okay, I don't want to leave. What's up? You're saying something. Oh, you signed out.
Yeah, it's
All right, well, you okay. Hello, everyone. Happy Wednesday. Welcome to the Multifamily Freedom Chasers Financing Zoom. For those of you who do not know me, my name is Shelly Miles. JJ, can you start letting people in, bud? My name is Shelly Miles, and I am a commercial mortgage broker and the co-founder of our brokerage company called Adventure Commercial Capital with Mr. Jerry Miles over there, who most of you already know. What our company do is connect real estate investors to lenders. Investors like yourself to lenders, so give us a call. Let me know, if this is your first time, guys, let me know in the chat. If I can find my chat. Put a 1 in the chat. Let me know if you've been here before. Put a 2 in the chat. So I should have 26 people on here talking to me. If I can find my chat. There it is. I'm seeing it. I see you. You guys are awake. All right, good. Awesome. We got some new second time Aaron. All right, Robert, this is your second time. I know Robert Dudd. I haven't seen him in a while, but he's here. How are you, Robert? Doug, welcome. Debbie, welcome. All right, guys, welcome. Jerry, you want to go ahead and take over?
Yes, I can do that.
Thank you guys for being here.
Welcome everybody to the Multifamily Freedom Chasers Financing Zoom. We do this every other Wednesday. This just happens to be our Wednesday. So first, we'll go through the agenda for the day. Can everybody see my screen okay?
Yes.
Okay, good. All right, so we'll go through the community ecosystem quickly. We'll do some introductions, and then we'll let a few of you, if you'd like, raise your hand and introduce yourself to the group. We'll go over the current debt market, and then we will talk. Our main topic is what are the 4 C's in commercial lending, and then we'll do a Q&A at the end. So we will try to be done by 9 o'clock. Usually we're done between 9 and 10 after 9. So, but I'll get moving to make sure we meet that goal. So, the Multifamily Freedom Chasers community, if you are not familiar with this community, you should be. We offer 4 Zooms, all educational through the week, all free. And we've been doing this for over a year now. So Mondays we have alternating Zooms every Monday, where we'll have an activation Zoom, and then the off Mondays we'll have asset management. Tonight we are on the multifamily financing Zoom with the Miles, that's us. And then we have a deal sourcing and underwriting with Ed and Kevin, and they are both commercial brokers. So they got a lot of information and can help in a lot of ways. So a lot of us that are hosting these calls are real estate professionals. This is our full-time job. This is how we pay our bills and feed our families. So, we're in the game and doing it every day. So, who are the Miles? That's me and my wife there, and 2 of our boys there behind us. We are commercial mortgage brokers and co-founders of Adventure Commercial Capital. We started this brokerage a little bit over 4 years ago now. We come from the construction industry. We've owned a roofing company for over 20 years now, doing a lot of commercial roofing. And we started investing in real estate ourselves about 8 to 10 years ago. Shelly always gets me with the times because I'll say 8 or 10 years ago, and she'll say, no, it was 12 or it was 5 or whatever. But it's been a while ago we started investing. We were put through the ringer by a few different lending brokers. And I told my wife that I didn't like the way we were being treated, and I thought that we could treat people fairly and honestly and do a good job, connecting people with money and help them to grow their assets. And so we started this company 4 years ago. We joined a national association of commercial lending brokers, and it gives us a lot of credibility and a lot of lending sources that we can go to for money for people. So that's what we do. That's how we got to where we're at. We're still investors. We still own a construction business. But our passion is helping other people grow their real estate portfolios. And we do that by finding the best debt sources we can find for them. So now I'm gonna.
Also, I just want to let you guys know, those of you who are new, we don't just use this platform for educating, but we also want you to use this platform to connect with each other and do deals. So if throughout the night you guys can throw your information in the chat and connect with each other, or you can tell your market in the chat. So if somebody else is in that market, you guys can connect with each other. And we have time for about 3 people to come and introduce themselves. If you're new, you're more than welcome to, and anybody is. So come and introduce yourself. You can tell about your market and what you do.
Take about a minute each. Raise your digital hand. We'll call on you. If you got a win, if you want to tell us who you are, whatever it is, we'd like to hear from you. JJ, I see your hand. This is our son, JJ, and he is a YouTuber, a senior in high school. We just found out recently that he's going to be valedictorian of his class this year, so we're looking forward to hearing that speech and all that stuff. So,
Yep.
let's hear JJ. What do you got, bud?
What's good? Yeah, I'm sorry if my dog is making noise in the background. But yeah, my name's JJ. I'm a YouTuber. I just want to do YouTube and make YouTube videos and get a bunch of views. I want to be one of the biggest YouTubers in the world. That's my goal. Yes, I was valedictorian. Pretty cool. So yeah, it's pretty much me. I'm just some 17-year-old kid, almost 18, that's just gonna be one of the biggest YouTubers ever.
All right.
Do you want to talk about a win that you had this week?
Um, yeah, I'll talk about it. So, I had a job offer come to me. A YouTuber wanted me to begin editing for them, and this YouTuber's very, very large YouTuber, and they want me to edit videos for them. And it's just a really crazy thing that's happening right now. And yeah, it's super exciting. Yeah, that's pretty much all I gotta say about it. Yeah, pretty
Yeah,
cool thing.
can't say too much yet.
Sorry, you guys just skipped over the fact. I have to say something. I'm sorry. You skipped right over the fact that he's a valedictorian. Holy cow, man. That's incredible, JJ. I'm sorry. Say that again. I'm the valedictorian of my school. Say it. Proud, man.
Yeah, I'm the valedictorian of my
No, you don't sound
valedictorian.
like you're proud, man. Be proud of that. That's an accomplishment, dude. That's like one of the
Yeah.
biggest accomplishments you've made so far. Please. I know you're all about YouTube. I've learned about you so far, but come on. Be happy
Yeah,
about that's it. Darn,
for
man.
sure.
You can go to anywhere you want with that.
I know for sure. That's definitely one of my biggest achievements for sure. It's cool.
Yeah. My daughter's a senior in high school and she is not the valedictorian. And I want her to be the valedictorian. Let's go. Let's go. Everybody. Yay. Let's go. JJ. Yay. Thank you. Thank you. A little bit of accomplishment. That's amazing. Sorry, I had to point that out. Jerry, I think you guys, I have to tell you, God, you're amazing. Okay, that's all. I'm done.
Thank
Thanks,
you,
Rachel.
thank you.
He's very
I
laid
see
back
your
like his
hand up.
dad.
You can go ahead and talk if you want there, Rachel.
Thank you. I'm Rachel Cohen, House of Kings Collective. And I don't know if you guys were on last week, but I finally closed 142 unit in Texas, Corpus Christi, code GP. Yay, Rachel. Okay, enough of me. I'm also raising on another one in Corpus, 101. I'd love anybody that's interested in that area to please give me a call, holler out, please. I want to involve people in this group and those deals. My number I posted, my information I posted, just reach out. And I also have one other opportunity in Arizona. I only need 800K left in the deal. So if anybody knows anybody that's interested in Tucson, Arizona, please reach out. I need to close that deal out already, man. I've been doing that one for a while. Let's go.
All right. All right.
You
Oh,
go.
sorry.
That's awesome.
One more thing. I have a podcast. If anybody knows, JJ, maybe you can help me get this out there for the YouTuber, man. Let's go. Get it out there. House of Kings Collective. Help me out, man. I want more doctors on my podcast. That's what you do. That's what you love. Help me, man. Share the love.
Awesome.
All
Awesome.
right.
Thanks for being
All right,
here,
I'm
Rachel.
done.
Make sure that you put your information in the chat so people can get a hold of you.
Thank you. Will do. Will do.
Wow, she's got it going on.
Yeah. Aaron, how are you, sir?
I'm wonderful, thank you. Hello. And Rachel is amazing. I've met her. She was one of the first people I met when I got into multifamily through, we're both in multifamily mindset. They have a nice Facebook page. She was one of the first 2 or 3 people who'd been in a while who I was able to befriend. And she has an incredible story. She was talking about JJ's valedictorian status. Rachel, just raise your hand. Yes, if you've told them, no, I see you, but no, if you've told them the key part. that I
Oh,
always like to promote
I
for
think
you.
everybody knows, but just in case, in '06, I was paralyzed from the chest down. I was told basically I would never do anything with my life ever again. And then about June, I woke up crying hysterically like a little baby, realizing that my youngest was going to be 18 in September. This is a true story. I flipped out. I spent all of my money on mentorships, my LLC, you name it. I joined it. I met everybody. I even went to Raise Fest. I've been to 10X. I've been all over the world, it feels like. And now I'm settled in and I want more people to come to me now. I am going to Peak though. I'll be at Peak this week coming up. And I'm so excited because I get to meet all these wonderful people that I've been talking to all these months. So bottom line is I'm back. I do have a heating pad on my back. I'm not perfect, but I am driving and striving. I want my children. I want them to have a legacy. That's the bottom line. Thank you, Aaron. He called me the Wolverine, guys. That's my new nickname from Aaron. He put it out there, not me.
I was getting to that. Oh, of course, I mean, shark or piranha would have worked, but Wolverine came to mind first. So, yeah. As anyone can tell, Rachel's a wee bit aggressive, but we love her for that.
Yeah.
I love your energy, Rachel. I love it.
Thank you, guys.
Um,
Thank you.
Okay. I'm Aaron. I'm in Phoenix, Arizona, and I'm with Hazelwood Capital Growth. I'm going to start doing some social media, have some content out there people can see, and I'll be promoting two things. I'm going to be promoting multifamily, and I'm going to be promoting multiple streams of income. I've got a couple of them ready to rock and roll right now. I'd be happy. I won't talk about it here, but if anybody thinks multiple streams of income is something that they want, send me a little DM on this thing. We'll talk about that sidebar. And in fact, I had kind of a win. We'll see what it is because I got to talk to somebody today. He's a gentleman who's got in a neighborhood of $30-something million portfolio, primarily single family homes, some small multifamily, and some building lots. And he wants to get a lot of it moved out. And I think I'm gonna have an opportunity to help him with that. That's pretty exciting. And he will be rewarding me, hopefully handsomely. We'll see. But I may have to call Rachel Cohen if I really want to get this stuff moved. We'll see. But and also I've got a well, I'll talk about that next time you see me. Never mind. That's enough for now.
Thanks for being here, Aaron.
My pleasure.
Thanks, Aaron.
Excited to learn more from you.
Awesome stuff.
All right. Well, we will move on to the current debt market. Since our last call, today, I mean, the treasuries have kind of been the same up until yesterday. We base a lot of our rates on the treasury rates as far as, Freddie and Fannie debt, CMBS debt, things like that. The treasuries have gone down about 20 basis points today, which means if you were to close a loan today, you would be about 20 basis points lower than you would have been yesterday or the day before. A lot of the lenders now are not locking in rates until the day of closing, just because they've been moving so much. We're still, the Fed rate is kind of has been unchanged. Jerome Powell made statements here this week also that he is, seeing that being cautious about lowering rates is more and more important every day. And so he's kind of kicking the can on down the road on when he's going to start these rate cuts. When he does start the rate cuts I don't think are going to be that drastic. He's talking about 3/4 of a point maybe this year is what he's talked about. When we were raising 3/4 of a point, we were going 3/4 of a point a month sometimes. And he's talking about 3 different, cuts at 1/4 point each. So I don't know that it's going to do a whole lot if he does start cutting. I mean, it might do more emotionally to the market than it really does. What's really going on and really the numbers, how the numbers go, it'll do more emotionally. But anyway, treasury rates determine the rates we pay. The treasury rate So if you want to kind of know what you're going to pay if you're looking at a multifamily deal that's fully stabilized, can qualify for Freddie and Fannie debt, that's going to be your best options for debt in the current marketplace is Freddie and Fannie. Very rarely, very, very rarely will you see one of the banks that beat Freddie and Fannie right now. Freddie and Fannie are a government organization. A lot of the banks are starting to feel a little pain and things in the market currently. But if you find what the 10-year Treasury is, I mean, right now or a couple hours ago when I typed this in on the slide, it was at 4.1. So if you're looking at a loan amount of above 7 million, let's say, I would add 1.5 to 3 points to the rate to that 10-year Treasury. So 10-year Treasury's 4.1. You're looking at an $8 to $10 million loan. A $20-30 million loan, you're going to be probably in the low sixes. If it has a lot of affordable housing and things like that in the mix, you could possibly be down in the upper fives. You take it into a smaller market, things like that, then you might be in the upper sixes. If you're looking at a property that is, below that $7 million loan mark, your purchase price is maybe 11 million, your loan amount or, might be 6.5 or whatever it is. You're going to add 2 to 3 points on the small balance side. So that 10-year Treasury of 4.1, I would add a point or 2.5 points to that for your spread. So you're going to be like maybe 6.6 to 6.8, somewhere in that range on average. So you can always, find the Treasury rates if you go to cnbc.com or just type it into Google, 10-year Treasury or 5-year Treasury. If you want a 10-year loan or a 10-year term on your loan, you would type in your 10-year Treasury to find out what that is. If you were looking for a 5-year term on your loan, you can look at the 5-year Treasury and then add these points to it. Right here, kind of where this was done on February 20th. This one was. It's kind of unchanged. Might be.
Yeah, the updated one is unchanged, so it's the same rates for the Mac. Can you guys see that, or do you need it bigger? Because you can take a screenshot of that.
Yeah.
I can make it bigger if you say it in the chat. Yeah, so it's good. Okay, good.
It's good. Okay.
Hi, Debbie.
All right. So when you're looking at this, you see the 5-year across the top, and you see the different loan to values and the DSCRs. Then you come down to the 10-year. You can kind of see the spreads. The things that will affect your rates are location. If you have a location that maybe has a little more crime, you're going to be a higher rate. If you're in a lower population, you're going to have a higher rate. If you have a lot of affordable housing, like where your rents are below the average in that area, you're going to be at the lower end of the rate. Those are all things that will change your rates. Here's the Fannie Mae small balance. This one was updated yesterday, 2 days ago. So these are the small balance rates. So the Freddie Mac here, or the Freddie Mac we were looking at, Freddie goes from 1 million to 7 million or 7.5 million. Fannie will go 1 million to 6 million is their small balance. So if your Fannie loan is going to be above the 6 million mark, you can kind of take a 0.5 point off a lot of these rates. If you're down below the 2 million mark, kind of between the 1 and 2, add a little bit to the rate as well. Now the current debt market still going here. We're in a stagnant market. The past year and a half, The market's been stagnant. We lost our slides. I just X'd out of them. Sorry, y'all. Can everyone see my screen still? Oh, did you take over, Share? You're muted.
Sorry, I was talking to you and I was muted. I took over.
Okay. I think I've got it now here.
I did. You exited out, but okay. You
Yeah,
can
I hit
take
the
back
wrong
over if
button.
you want. I saw you were having trouble.
Yep. And there we are. Okay.
Sorry, guys.
There we
You
go.
got it?
Yep, I've got it here.
There you
go. Okay. So the past year and a half, we've been really in a stagnant market. But there is a lot of opportunity coming. Kind of where we've been is sellers, if they can hold on to the properties, they are doing everything they can to hold on to the properties. As the rates have gone up, cash flow has gone down, NOI has gone down, which has in turn made the properties less valuable. The value of these properties is in the NOI. So when it goes down, the properties are less valuable. And then on top of that, when your rates go from 3% to 6 or 7%, you're now not paying a 4 cap. You're going to pay a 7 cap or a 6.5 or an 8 cap. And so a lot of these owners are sitting and praying and hoping and that they're going to eventually be able to get out of these properties without losing too much money. So they have just been holding on, waiting on the Fed to lower rates so they can still make their money on these deals. People are not going to be able to hold on forever. The banks are not going to allow them to. A lot of people their properties, if their loans have come due and they've gone adjustable. When we're talking about the debt maturing, when debt matures, if they had a 3-year term or a 5 or a 10-year term, and that term is over, these loans are amortized at 30 years, and when that term is over, that fixed rate is now adjustable, and it's going up, and it's killing cash flow. A lot of these properties, it puts them into what they call a technical default. You're required by the lender to keep a certain DSCR on the property, and if your DSCR goes negative, a lot of these banks have a right to take that property back when your DSCR goes negative. And I know people recently that have lost properties because their DSCR has gone negative. Taxes have gone up, insurance has gone up like crazy. They go adjustable, insurance or the rate jumps on them, and now they're negative their DSCR is negative. I know one guy that lost I think the property was probably $80 million. He had a $54 million loan on it. Lost it to the bank because the DSCR went negative. They called the loan back. The guy lost. He lost some credibility. The people that had vested equity in the deal, they lost. So there's a lot of losing that's going to come. But because of that, this major correction that's underway, there's going to be a lot of opportunity. So not all doom and gloom. I mean, the market is not in good shape right now, but because of that, it's going to give us opportunities to get good deals. So I could keep on with that, but I'm going to move on. The 4 C's, our main topic for the night. 4 C's of commercial lending. I have to give Shelly credit for this. She's the one that said, "Hey, why don't you do this?" And so I said, "Okay, let's run with it." We've been doing these for over a year now, and so when we go to do one, I'm like, man, we've done that, we've done that, we've done that. So we've not done one on this or kind of like was this one we're doing. So we'll do some repeats, but we'll try to do some new ones here and there too. So um, the 4 C's in commercial lending: character, capital, capacity, and collateral. And we're going to go through all these here. So number 1 is character. When you go to buy a property or anything you do where it requires a lender or someone that's going to give you money for this, where they're going to expect you to pay it back and things. They are going to be doing credit checks. They're going to be doing all kinds of different checks on you personally to make sure that you are trustworthy. The bank is not going to, I know a lot of gurus out there. Grant Cardone, I love the guy. We're in his real estate club. We pay a lot of money to be in his real estate club, because we see value in it. But one thing he says all the time is, hey, you don't need credit to, when you're buying bigger deals, you don't need credit, you don't need this, you don't need that. Well, whoever's signing on the debt is going to have to be able to show a credit score. And to qualify for agency debt, you're going to need to be able to show a credit score of 660 or better. I know credit issues happen. We've had bad credit in the past. We've cleaned up credit, and I'll give my wife credit on this as well, as she spent hours and hours learning about how to build credit. And she's built credit to give us both, almost perfect credit scores because of the little tricks and things she's done that she's learned online to build credit. But work on getting your credit in order if it's not in order. I've heard people also call a credit report or a credit check a character check, because they're checking on you, your character of you as a person, to see, hey, are they paying their bills? Are they making sure that they're paying their debts, and taking care of business? So this one is the very first one in the 4 C's of commercial lending, is character, and this also goes into other aspects, and we'll kind of talk about it as well. So when you're going to raise money from people, if you don't have a good reputation with people in your family, you're probably not going to be able to raise money with your family. If you don't have a good reputation with business people in your area, you're probably not going to be able to raise money with them. So just the character of things, and, showing yourself trustworthy in all ways is going to help you in the commercial real estate space. Number 2, capital. Capital can come in debt or equity. We're on here tonight to talk about the debt market. That's what we do. We lend on debt. We lend debt. We also have some equity options on bigger deals. Smaller deals, it gets tougher to fund equity. But, if you're going to buy deals, you're going to do those things, you got to learn how to raise money. You either need to learn how to raise money, or you need to be in a business where you can make more money. There's a lot of people out there that some of the biggest apartment owners in the country are people who have a business, and they use that money from their business to buy real estate. Some of the biggest landowners in the country are that way. And then, with the capital side, you also need to know how to secure debt. To be able to secure the debt, all these kind of go together. So you kind of go back to that character slide of, I need to be able to have the, I need to be able to have the character to be able to sign on the debt. The character is part of that, of being able to secure the debt. So the next one here, capacity. a very, very, very important thing when we're looking at lending money. The very first thing, if I bring a nice looking property, we're brokers. If I bring it to a lender and I say, hey, look at this property, look at the cash flow, this is what they want to do to it, things, the very, very first question they're going to ask me is, who's buying the deal? Or who owns the deal? Who's buying it? They want to know. And, if they don't know you, they're going to be saying, hey, send me an SREO, which is a schedule of real estate owned. And they're going to want to know, hey, has this guy bought deals like this before? Do they have, they're going to want to see a PFS. Does this person, have the personal financial statement to be able to buy this deal? Do they have what it takes to, complete the business plan that they've now shown us? If you do not have that, you need to have the partners, or you either need to have partners that can show that, or you need to show that you're capable of it. So, part of being able to show, I meet a lot of people in these, we're in a real estate club. We've been involved with multifamily mindset, like we heard about earlier, all these different masterminds and groups. There's a lot of people in those groups that are hungry and going after things. And so if you partner up with 4 or 5 people in one of those groups and nobody's ever bought anything, the group together is probably not going to be able to buy anything. When you're going to qualify for a loan, you need to be able to show a net worth of the loan amount or better, a net worth equal to or greater than a loan amount to qualify. So that's part of the capacity that you need to have to be able to buy a deal. So when you're looking at connecting with people, it's important to, connect with people that have capacity. If you have 2 or 3 guys that have each, got $2 or $3 million net worth, you can combine those and you guys can all be together and sign on the debt together. If you have a net worth, each have a decently high net worth, and you can sign together and buy a deal together. But just, having the partners or being able to show that capacity yourself is important. So I hope that helps. Next, and the last, is collateral. And right along with that, another C, kind of a bonus C, is kind of the same thing as the collateral ain't much without the cash flow. So asset needs to cover expenses and the debt. And the asset needs to be something the bank would want. So the bank looks at these as a worst case, and they'll look at it, especially the private lenders even more so, is if these people don't perform, if they don't show, if they don't have the capacity here, and we have to take this collateral back, is this a property that we even want to own? And the banks, a lot of them will look at it that way, and they'll say, hey, is this a property that we will want to own? Will it do anything for us? And we have a lot of people that come to us, especially lately. There's been I've seen a lot of kind of odd, one-off properties. The collateral, a lot of ways, if you're wanting to get debt on a property, well, let me say it this way. A property that is easy to get under contract, you need to look closer at that property, especially now, because there's so many people out trying to buy. Not a lot of deals being bought, but there's a lot of people trying to buy. But if there's a property that's easy to get under contract, look at it closer and just make sure that you're not missing something. I see a lot of deals that come to me, that might be a hotel, and that hotel on the property has a single family house, and it's all part of the same property. It is very tough to start lending on those types of deals. For one, smaller hotels are hard. When you put a house for, I guess, a manager's house or whatever on the property, it gets even tougher to lend on a deal like that. Because they don't know if they're lending on a hotel, if they're lending on a house, what the situation is. Um, you know, RV parks where you'll have a mix of like mobile homes and RVs, almost impossible to find funding for. If you have a mix of like long-term rentals and short-term rentals and all that in an apartment building, very difficult to find funding for. So like the more specific the asset is about how they're going to collect their money, the easier it's going to be to get debt on a property. This is kind of off topic, I guess. Well, it's part of the collateral, but it's just something that we've been seeing a lot lately is, a lot of people buy multi and then they start throwing Airbnbs in it. Yeah, you're going to make a little more money maybe at the present time, but then if you want to go to sell or you want to refi, you're going to have a hard time being able to do those things because you're not showing that monthly income. That bank likes to see the steady income that comes in on those properties. If it is a short-term rental and that's all you're doing, that's fine. But, you need to have that in your business plan. They don't like the mix and match. The banks don't, no lenders don't. So that is the 4 C's: character, capital, capacity, collateral. You got to put all those things together to be able to get a deal done. Got to have the collateral. Got to have the good asset, the good property, the capacity to be able to do that deal. Somebody on your team, if it's a big property that needs a lot of rehab, you can't just have a guy that's bought, properties before. You need to have somebody on your team. And I'm not talking just a guy who says he's a general contractor. You need to have that guy on your team in today's market that has bought a deal and has rehabbed it and brought it through all the way through to be able to buy a deal right now, because the banks are getting more skittish on deals. Got to have the capital and really to put it all together to be able to get somebody with the capacity to work with you, to find the capital to, talk to a broker that's going to let you sign a contract for the collateral. You need to have the character to begin with. So that is it for the 4 C's and commercial lending. I will open it up for Q&A. If you all would like, you can throw questions in the chat or just raise your hand and ask. And I'll give you all a second. If I don't hear from anybody, I'll move on, and then you can always ask questions through the end of the slides here. I'll just go ahead and move on. We are commercial mortgage brokers. We lend on multifamily, hotels, self-storage, anything commercial real estate related we lend on. If you are reaching out to us for a quote, the things that we need for a quote: T12, rent roll, OM, if you have it, it's very helpful. A summary of what you plan to do with the property. I'll have people sometimes that just send me a T12 and a rent roll. They don't have an OM. The T12 and the rent roll don't have an address. I don't even know where it's at. And then, I don't know what they're thinking. Does the property need work? Is it, do you have CapEx? What's the deal with it? I need to know. And then as we can give you a quote with those things. And then, sorry, I was trying to read the questions, read the chat, make sure I'm not missing any questions. So as we move on down the road, SREO, or schedule of real estate owned, is really important. So having that capacity or the partner that has an SREO, if you don't yet, is important. And then a personal financial statement are things that we will need to move forward on the deal. So if we get a signed contract or PSA or whatever on it. If you are brand new and you're just now looking at deals and you're trying to, you want to be the person that's able to sign on the debt one day. There's people in the group, there's people on this call today that can sign on deals and help you buy deals. But one day, I mean, I think we all want to be able to sign on the debt and to be able to be the guy or the girl that is able to buy deals, right? So what can you do today to start heading towards that or heading down that road? Number one, make sure your credit's in order. Start working on that. Work on your personal financial statement and SREO. Personal financial statement is just you have an asset column and you have a liabilities column, and you want to continue adding to the asset and you want to continue taking and making the liabilities lower. And just keep working on that. And if you don't ever put them on paper, you don't know what you got. We're working on ours. We're adding stuff and taking stuff away on ours this week. We were looking at it, right, babe? So get your bio together. All of us, you're all being educated tonight. On this call, on all the Zooms you're doing. If you're in the Freedom Chasers community, or you're in Multifamily Mindset, or Pace Morby's group, or whoever it is, put those things in your bio. If you've wholesaled houses, if you've flipped houses, whatever it is, put them in your bio. And we can all start working on raising capital and making more money. If you have a business, push your business. We're pushing our business continually so we can have more money to invest in real estate. That's the whole purpose behind us being in business. We have a few businesses, and we're pushing those businesses because we want to make more money so we can put more money into real estate. And another way, if you're not a business owner or whatever, you're all here in the real estate space. We have a referral program. And if you refer customers to us, we pay referral fees. So we have a few of them out right now that we're working. One of them I was looking at today. If we close the deal, our referral partner is going to, probably it'll end up being like a $39 million loan. Our referral partner will make somewhere in the range of $100,000 for referring that business to us. So, where we make 1% of the 39 million, it's 390,000. He would make around a little over 100,000 for referring that business to us. So if we can get the deal closed. So we will be doing a Zoom on our referral program here over the next couple weeks. Do we have one on the schedule?
I don't have one on the schedule. I've been a little bit busy.
Yeah. All right, we'll get one on the schedule.
Yeah, I'll try to get one on the schedule, and don't worry, I have all of your emails. I will send it out to you.
Yeah. Yep. So we
And you
do.
just jump, it's like a 30-minute Zoom call we do, and it just tells you how it works, what you're gonna get paid, and it's
And how to
nothing long.
how to make the referrals to us. So how to make
Yeah,
the
and
introductions.
how to make the introductions. Yep.
So this week's verse, we do a verse every week, or every other week. Proverbs 29:18, where there is no vision, the people perish. So this is meant to be, I think, spiritual and business and family, everything. If you're married, if you don't have the vision with your spouse of where you're going in the future, that marriage is not going to end up well. If you don't have a vision, and like we talk to our kids about, hey, you got to have a vision of where you want to go. You got to have that vision, or you're not going to go anywhere. And it's the same way with business. It's the same way your spiritual life, whatever it is. So, and this is our next topic. What are the top 5 factors to consider when investing in real estate? And then you can connect with us. The Multifamily Freedom Chasers ecosystem on YouTube, Spotify, Facebook, WhatsApp, Instagram. We're everywhere.
Yeah, if you guys are not part of the Facebook group where you can get all the updates on the events that are going on Mondays and Wednesdays, I just threw the link in the chat. You guys can grab that and be a part of our Facebook group. And here is our WhatsApp group as well for our multifamily freedom chasers. Go ahead and scan that QR code and be a part of our WhatsApp chat as well, where you can connect with even more people. Because we have over 1,800 members in the Facebook group. I'm not sure how much is on the WhatsApp group, but you guys can chat every day. So
Yep.
there's always somebody on there talking.
And here is our info. That is my cell phone number. Feel free to reach out with anything you guys have. That is both of our email addresses. And then if you scan the QR code down there, that is for my Hi Hello card. So
No, the WhatsApp is not called the Titans. It's called the Multifamily Freedom Chasers. But I am part of that group as well, the Investor Club.
So I'll leave this up another minute here. Make sure to continue to stay plugged in with the community. Next Monday, it'll be Iffy and BB talking about asset management. I'm not sure what their topic is. And then next Wednesday, they'll be doing, a call about your relationships with brokers and things like that. So make sure you plug in, stay plugged in, let people know who you are. I joined Grant Cardone's Real Estate Club about a year and a half ago now, or a little over a year and a half ago. In the first year we were in there, you pay $25,000 to join. A lot of people join for 1 year and never join a second year. There's a lot of big people in there. I mean, when you're in the club, all these people that, Michael Blank, Pace Morby, all the big guys that, have their own mentorships and all these things, Alex Lovely, all the different ones, they're all in Massive Capital. They're all in the real estate club. And they're all there getting mentored by Grant. And so, our first year, what?
Can you go back to the last slide?
Yeah. Our first year, in the club, we got a lot of calls, a lot of things, but a lot of the bigger people weren't calling us. We signed up for the club a second year. Now some of the biggest people in the club are now calling us to do loans for them now. And, we're refinancing properties for them. They're referring business to us. So just keeping in front of people, staying in front of them all the time is very important. When we were in the club for a year and then we signed up, paid another $20,000 for the second year, these people were like, oh, well, they're here to stay. They're, reputable because we've lasted a year and we haven't ripped anybody off and, the whole 9 yards, which doesn't happen to everybody. Just staying in front of people is important, y'all. So.
Hey, Jerry, quick question on the LTV in this market. I think I asked this few months back.
Yeah.
It was about 65 to 70. So even in the current market, we are looking at 65 to 75 range, or back to 80, the normal.
It depends. I mean, if you're in like, let's say, your C- neighborhoods, you're gonna require like a 1.5 DSCR, the lenders are. And so if you get a really good buy, you could possibly get to the 75%. I've seen that, and I've also seen where the lender's like, I know the DSCR is going to be at 2, but I'm not going to lend more than 55% on this one. On the nicer assets, we are going to be, held at that, 1.25, 1.3 DSCR. So wherever it comes out to, I mean, a lot of them are coming out to that 60 to 65, 70% loan to value, but it's all DSCR restricted. We can lend up to 80%, with a lot of our products, but, if the DSCR at 80% is only 1.1, you know, we're not going to be able to lend 80%. So if that makes sense.
Got it.
So.
But for hotels, you can get SBA up to 85, right?
Yeah, SBA.
Mhm.
Yeah. Yeah, and I mean, SBA might only require a 1.15 DSCR. So they're still going to look at the DSCR and it's going to restrict them. So,
Yeah,
Robert.
but max we can get is 85, right?
Oh, okay. Gotcha. Okay. Well, thanks for being here.
Sure.
Yeah.
Hey, Jerry, quick
Hey.
question. I'm sorry I jumped over Robert. Quick question.
Yeah.
So Michael Blank is in Grant's real estate club now?
He's been at the I haven't seen him on the calls, but I see him at the real estate summits. He's been at a couple of those.
Yeah, okay,
So
cool.
I don't
Man.
know, I don't know that he's I haven't seen him on any of the calls, but I don't look through all the names. But the last few summits I've been to, he's been there at all of them. Pace Morby's been there at all of them. You know, they're trying to think of who else. Who's that other guy that
I know Robert's there, King Gee's there.
yeah.
Those are my guys.
Yeah.
Of course, Michael's having a cigar. Sorry.
The Hawks
Yeah,
have
Michael Hawk's there.
Sorry, the hawk is
Yeah.
having a cigar.
All right. So Robert,
Where'd he go?
I don't know. You still here, Robert?
Yes, sir.
Yeah, go ahead,
There you
Robert.
Yeah, for someone putting together a GP team, I'm curious, is the deep dive for the financials just the sponsor of the deal? Is it for all the members of the GP team too? Is there any kind of review on the members of the GP team for the lending side of things?
You know, there will be occasions where they might ask for everybody, but if you have one guy that's signing on the debt, generally that's good. One person signing on the debt, they're going to look at them and them only. But you know, there's a lot of shady people out there, and the lenders know who the shady people are. If they see a name that they recognize, you know, if they've been on deals and they don't like this, those names get around. It's a small world, you know. Those names get around, and that lender might say, "Hey, I'm not doing the deal with this guy or that girl or whatever," you know. So
It's a
if
good
they're
tip.
part of the deal, we're not doing it. So that might, that can happen. But generally, it's just that person or persons, that you can have several that sign together. So,
All right. Thank you.
yeah. So, but
I
join
got
the
a couple more
calls.
questions.
Well, good.
I got a couple more questions in the chat here before we wrap up.
Okay.
So Cecilia said, when would you recommend for someone to consider such a club? I think she put that there when you were talking about Grant Cardone's club.
Oh, okay. Whenever you're serious about really getting deep into real estate, whenever you're like, hey, this is what I want to do, this is what I'm doing, nothing's going to hold me back. And it's a big thing undertaking financially for a lot of people. So, and when you have the money to,
And those clubs, they skip you like 5-10 years ahead immediately.
Yeah.
You learn so much and you're constantly immersed in it because you paid for it, right? So you're being held accountable. I mean, that's the biggest thing we've gotten out of it. We've been skipped ahead 5-10 years instead of doing it on our own.
Yeah.
Being around those people is just awesome. Michael knows he's been there.
Oh yeah. And let me just chime in. I mean, let me round out the point. I mean, even if you're struggling with the education of multifamily real estate, you meet some of the greatest partners you can possibly have, right? And like we were just talking about, like Michael Blank, Robert Martinez, King Gee, all the big names in multifamily real estate. You kind of meet, who you want to follow and who you can leverage Like I met the Miles there, right? But met Jerry, Shelly, JJ, Jordan. I know the whole family, right? So I can't express more. Find the right club, and then you find the right people in there that's just as committed as you, and you kind of grow together, and then you'll find your partners that can potentially be your partners for life on these deals. So I mean that's really the biggest key is the network, the education, and then finding kind of your community that will help support and push you along.
Yeah.
Absolutely.
That's awesome. Awesome.
So just to summarize, like, so these clubs will help us for capital raising as well, or?
Yeah.
Absolutely.
Okay.
You find everybody in there. Asset managers, capital raisers, lenders,
People that just
everybody.
want to lend on deals. Yeah, people that have money that just want to lend on deals.
I mean, GP guys,
Yeah.
LPs, you find everybody in there.
Okay. And how much you said? 25,000 a year, right?
25,000. It was. I don't know what it is now.
I'm
That's
not
something
sure.
new.
He said it was gonna go up this year.
Yeah, they were.
he did.
I didn't mean to chime in, but yeah, it's supposed to go up to like, he said 75,000.
Yeah.
Oh,
That's
that's a 3x.
That's
for
like
sure.
3x, dude.
Yeah, I heard some
If you
of the
participate,
yes, some of the salespeople, grain salespeople were saying they were throwing around the $100,000 number for the year. But yeah, people would
if you
still pay.
participate in his mentorship, I apologize for interrupting.
Oh no, that's
But
fine.
If you sign up for his free mentorship live for the 2 days real estate live course, then you get the discount of still 25,000.
Okay.
Oh, okay.
Cool.
Good. Yeah, I see
I
that.
just happened
think
to
he
do
said
it just a month ago, so it still works.
Thank
Okay, cool.
you.
Yeah.
Thank
You're
you.
welcome.
That's good to know.
Yeah, and if you do it sooner than later, I mean, they're talking like people that have been in the club, like that they're going to continue to honor the pricing that we signed up at. So like our price to renew every year is 20,000. And they've said that won't go up to renew, but who knows? There's been some people in that club,
I'm not negating, I'm not negating what you're saying, because clubs are very important. But like, I spoke to Alex personally. I don't know that he's renewing.
Yeah.
I don't know if I don't want to negate it, please. It's a very important thing.
Yeah.
But maybe not every year you need it, just to get yourself foot in the door,
Yeah, for sure.
to get your group, to get your people.
Yeah. And you make connections that are long lasting.
Yep. Yep. And depending on what your business is, what your goals are, like I said, just being that steady, hey, if I go to a real estate summit, I'm always going to see Chris and Maricela with Upplex. I'm always going to see them there. And whenever I go to any of those events, I'm always going to see them. I'm always going to see Ken G or Ken Gee. I'm all the same people, and I want them to see me the same way. Like, hey, if I'm going there, I know I'm going to see Jerry. And so it's a way of
If you talk to Maricela or them, please tell them I apologize. I accidentally posted something in their group and they exiled me.
Uh-oh.
It wasn't intentional.
Yeah, that happens.
Yeah.
Richard, you gotta buy Chris one of those cool shirts he wears.
I'm so gregarious and like I just go for it, and sometimes I'm like, oh, what did I do?
Yeah.
So yeah, it happens. I'm not gonna lie.
Yeah. Well, cool. We are going to jump off of here. We have
I'm going to
waiting
share
on us, so
I'm going to share the Multifamily Freedom Chasers Facebook link again in the chat. Go ahead and join that. You guys will get the recording of this Zoom call tonight on there by tomorrow. And I cannot share my PowerPoint. I'm sorry, but you will get the Zoom link for tonight, the recording.
for the other recording. Yeah. So Everybody have a good night. We could stay on and talk all night, but we have people that
Thank you for sharing. Enjoy
Wait.
your family.
waiting on us. So
Thank
Well,
you guys for
everybody-
joining. I will leave you guys with some music. Bye, Michael.
yeah.
Bye, Shelly. Bye, Jerry.
Yeah.
Bye, JJ.
Good to see everybody.
Let me leave them with some music. There we go.
When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. Prove what? Getting money, never losing no. But I'm broke, but now I'm living at it. They just count my zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico. I invested though when I let it grow. Regiments, I got a pocket full. Raise the income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my doctor down. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the chance. I buy apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heels on is?